Thank you, Rachel. And thank you, Frank, for that perfect discussion to lead us into this conversation. We are missing a mic, so if the team can bring a mic for Lin. You're talking about how to offset some of the energy-intensive proof of work with more beneficial impact on the environment, Frank. But is proof of work still relevant? Is proof of stake not potentially a better technology? It's much less energy intensive. It's able to focus a lot more of the compute power that's going into this system on actually validating transactions. Is proof of work obsolete? And if you disagree, why not?
I think there's a pyrite out there and there's gold. And there's basically, you think of fake gold, that's pyrite, and you can think of proof of stake. It's just problematic. And to create gold, you need to use energy. To have a brick of gold, to create a digital asset, you have to have electricity. That's part of the economics that said what is the value that you created is also an energy component. And I think the third part is there's a high probability that the regulators are going to go after proof of stake, which they're right now aggressively going after Ripple. And so with that, I think there's a great risk with proof of stake. And I would share with my own experience is there's lots of cowboys out there with pump and dumps in the proof of stake. And you really can't do that in Bitcoin mining. It's a big CapEx spend. And to be number one in efficiency, it's tremendous logistics. Proof of stake doesn't have any of that. Now, yes, they have coders, but it's a different world, Zach. And so I think if it gets regulated, then proof of work will all of a sudden explode in relative valuations.
So, taking this analogy with digital gold, implies a greater level of security in a proof of work denominated asset. Would you agree that proof of work is more secure?
That's for me? Yeah.
Romain, yeah.
Yeah, totally. So I totally believe it's secure. And as Frank was saying, the energy is what secures the network. And today the proof of work and Bitcoin is the only coin now and blockchain based on proof of work. And the fact that we miners work on a consensus, 51% needs to vote for the new block, and the power and the energy that we need to have this consensus makes it ultra secure. And when you want to secure digital property, like Bitcoin is, I think security is key. If you want to protect a monkey image, a JPEG, fine. Go use proof of stake with Ethereum. We're totally fine with it. I think it works perfectly well for that. But if you want to protect your assets, your money, do it with Bitcoin, do it with a proof of work, and with something that is tangible, the electricity that we use.
So one of the arguments supporting proof of work versus proof of stake was historically that proof of work was more decentralized and proof of stake had the risk of becoming centralized. But is proof of work with the dynamics of capital intensivity, what's happening now with consolidation in the mining space, is proof of work and a proof of work blockchains not becoming increasingly centralized? Do you not see that as a risk at Lake Parime?
No, well, I mean, centralization or decentralization, it really depends on what time frames you're talking about. You just mentioned we're potentially going through a consolidation phase in the mining industry, and if you think about proof of work since its inception, you have these cycles where you have different mining pools and different mining operators who are competing to be to have the dominant hash rate on the network, and you'll continue to see these cycles as the different stakeholders have sort of different cost structures and profitability metrics. So I think the question around centralization really depends on what time frames you're talking about.
So, Lin, Frank shared with us some ways that the energy use of mining Bitcoin can be used for good. But what are some of the other credits to the energy usage and offtake of Bitcoin? What value does it provide to an energy grid and to those powering that grid?
Yeah, sure. I mean, yeah, I think Frank, the presentation, right? So, demonstrate many examples, right, that their firm is doing it, okay? But how we see that, right, is that we see Bitcoin mining is actually more a low balancer, right? Yeah, from this kind of, particularly for this kind of green energy. Because if you look at, say, the investment of return, right, for, solar energy, for hydro, it's talking about 10 to 15 years or even more than that, right? Okay, so actually, and also, right, the variance, right, which is the energy that they produce, right, is not something stable. Okay, so sometimes you get more, but if the storage or, it's very expensive. Okay, so from mining perspective, right, because Bitcoin mining is a store of value, right? As long as you turn on the machine, you mine the Bitcoin, it stores the value. So, Bitcoin mining, proof of work mining, we see that's a good load balancer for a lot of this kind of green energy farm that they can use to, first of all, right, to, prevent, this kind of wastage. Second is that, right, because mining is actually profitable, particularly if you have a long run rate, right, say to pay the electricity bills, etc. So you can always wait for the good moment, right, to liquidate, to sell. So actually, so net-wise, right, it also shortened the investment of return, say for all this kind of green energy farm that, so right now, which is quite heavily, right, relying on, say, government's subsidy, etc., right, to build, to sustain, right. So I think this is actually, you can say, a very good hedge.
Yeah.
Zach, I'd just like to add, which I did in my presentation, HIVE was also, I believe, the first public mining company that, in partnership with the utility company, to balance the grid. And you got to think of a sailboat and having a keel or a dagger board to balance it, and they pay us. Now, Riot has made substantial gains, and they've talked about the amount of money they made doing this in Texas, but we've been doing it for a couple of years, and because of our software, we can go from 30 megawatts down to 3 in seconds. A big hydro dam cannot do that, and they cannot ramp it up quickly if there's a big demand for energy. So we are balancing the grid, and then we'll be making food, and we're going to be, I believe our vision is also to heat the hockey arena, which will save a lot of money for the community, and we'll also be able to produce Bitcoin. And so this idea of balancing the grid is really significant for what Bitcoin miners can do all over the world.
And if I may add also, I think one thing that is very important in what Frank is saying, curtailment is only doable with Bitcoin mining. Why? Because we can stop our Bitcoin miners, as Frank said, in seconds. Same thing for us, we're connected to the electrical grid. We can stop in 3 seconds, going from 20 megawatt to 0 in like a few seconds. We can do that because our miners, when they stop, they just don't mine Bitcoin. We're not losing data like a data center like Amazon or Google, your pictures or your TikTok. With proof of stake, you can do that. Your node needs to be running. You can't do curtailment. And it's a big advantage when you want to balance and to stabilize the grid where we operate.
Sath, I'd love to understand your views on, for those on the utility side, those providing energy in a system, how does having a Bitcoin miner operating within your grid and taking off some of your load, how does that help the underwriting of renewable projects?
So at Lake Parime, we're largely focused on working with stranded energy sources. So we have projects in New Zealand, Canada, and more recently in Nigeria, where we're helping utility companies monetize the full value of these assets through Bitcoin mining. And by unlocking this value, it actually helps support reinvestment into grid infrastructure and help provide energy security, particularly, and I think this is really powerful, particularly in developing countries where energy producers and the electricity system can't rely on, predictable consumer demand for power. So it's very difficult to invest in the grid. And that's where something like Bitcoin mining can actually be a really powerful force for good in the energy system.
Romain, in markets like North America, where do you see the value of Bitcoin miners, potentially adding to a grid where you don't necessarily have stranded energy, but you have variable loads, variable offtake, variable demand? What's the role that the Bitcoin miner takes in those situations, and why can that support renewable developments, or does it pose challenges for the grid or pose challenges for the environment with the Bitcoin miners adding to energy demand on a net basis?
Look, I think there's a huge misconception that energy can be wasted. Strictly speaking, you can't waste energy. It's transformed from one state to another, and you can debate around if these transformations are useful or cause negative externalities. I think at the end of the day, if the primary source of energy is sustainable, creating demand for energy is actually a good thing and will drive down the cost of energy production and help all sorts of energy-intensive industries.
Yeah, and also I believe that in North America, what we're saying right now is lots of a new initiative to be behind the meter, to use stranded gas or flare gas, mainly in the US. In Canada, in Quebec, where we mine, we are luckier because our energy is 100% renewable, mainly from hydroelectricity. But what we're seeing right now is more miners getting access to energies that are remote. It's also very interesting because we are creating jobs in remote area. We are not only just plugging computers. We are really creating a community. We have workers working full-time for us, but also we have a network of electricians and different kind of people who can work in places that are very often very remote. Though I think it's very important also for the development of our industry to show that we are bringing something just good for the environment and the community around us.
Frank, HIVE was one of the first Bitcoin miners to list on public markets. It's seen its way through a few cycles, whereas a lot of miners have really just emerged in this most recent cycle. How have you been able to withstand the cycles, and what did you see in this last cycle that you think led miners to make some mistakes in how they manage their businesses?
Well, whenever you have a volatile asset class, in my experience of running gold funds, from junior microcap exploration up to the creation of royalty companies like Franco-Nevada, and so what you see is that you cannot take on those debt loads, and that's being a big issue of we're seeing in Celsius, huge leverage. You can go back to the credit crisis of 2008. We can go back to shadow banking that was a big issue in China about 15 years ago. So we have this leverage, and it surprised me is that some of our peers were borrowing at 12, 14% and $1 billion or $100 million. And I think that's the big lesson here. You cannot afford this type of 12, 15% coupons. And I don't think some of the other companies I've spoken to actually read the agreements because there's a lot of predatory lending. And that predatory lending is causing sort of a real turmoil within the industry, but it's all about leverage. And this is a business where you could tap the capital markets, raise capital, and didn't have to take on all that risk.
Lin, do you see the way capital markets are determining the way miners are able to evolve their businesses, resulting in more industrial scale mining?
Yeah. Yeah. So because so right now, say from the whole global economy wise, right? We are more in a difficult situation. Yeah. So from what Frank's saying, right? Okay. So when there's a bull market, so there are miners, they can raise funds easier, they can raise debt easier. So which turn out that, I mean, they are paying 12 to 14% of the, say, interest. I mean, we see some guys paying actually more than 20. Yeah, so that actually, I mean, because of the, I mean, this kind of high interest rate payment, right, kind of like force them to get in the market, right, buying the machine at the peak. Yeah, so which caused, I mean, the situation that we're seeing the, I mean, this kind of news about, yeah, every day, right, from other mining company. So, but indeed, right, I mean, yeah, so mining, right, I mean, say this for the whole mining cycle things, I mean, this is an exercise, right, or a business, right, that which is supposed to be much more long-lasting, that supposed to be, I mean, say, need to have this kind of, I mean, cash flow healthy, right? That, I mean, we didn't really, I mean, leverage too much. So, but because of the, I mean, say, the nature of crypto, right? That's kind of like, I mean, you can say, encourage people to leverage more, particularly during the bull market. Yeah, but I mean, and also because of the cycle is quick, right? I mean, so it's kind of like a natural correction. Yeah, say from market perspective that, I mean, yeah, the over the leveraged firm might suffer, and yeah, firms that with good cash flow, yeah, can sustain and grow bigger, right? So this is what we see, but in the long term, right, we actually see the benefits of the proof of work, say Bitcoin mining, will sustain there, and actually there should be more and more participants, right? Particularly, we see more energy companies will be getting involved because yeah, back to the point, I mean, this is a very good hedge for them.
I think like the next evolution of Bitcoin mining might actually be new business models and even revenue stacking. I think Frank gave a glimpse into some of the possibilities of, you know, recycling heat produced from mining. I mean, we're looking at ways to even get carbon credits or even make Bitcoin mining carbon negative. So I think the next cycle of Bitcoin mining will be new business models, and similar to what's happening in the grid scale battery space, where it's all about revenue stacking, different services you can provide to the grid and things like this.
So I'd like to understand, obviously, one of the challenges has not only been the precipitous fall in price, miners faced with high interest rates, high energy costs, has been, you know, has exacerbated that challenge and really pushed miners to the point where they're unable to operate their mining equipment for large parts of the day, depending on where their location is. What has the role of energy and energy prices played in this cycle? What is the role of availability of energy in also driving difficulty, which has also not come to the rescue? It's continued to rise. Romain, I'd love to understand, you know, the kind of energy perspective. We're talking about chips on a different panel, so let's stay away from chips. I know that's a big part of that discussion, but I'd love to understand the energy side of those dynamics.
Well,
Romain.
I guess we are. I mean, not I guess, it's a fact. Bitcoin miners are using around like 85% of cost for electricity. So if you want to survive in this game, and the game is the last survivor, you need to have the lowest price for your energy per kilowatt hour. So that's really something that is key when you want to continue being profitable operating your business. But it's not enough. You also need to run a data center or centers that is extremely efficient in all the steps of creating a Bitcoin. That means that you need to have a stable energy, so that energy that never stops. You also need to make sure that your Bitcoin mining rigs are kept at a 25 degrees Celsius in all the time. And if you put 240 volts at the bottom of the miners, they will be producing more Bitcoin, and they will be mining in a longer time. We are in a long-term game. I mean, we need to run the miners for a certain number of months before we can have a return on investment on those miners. And the last part that is very important also with what we do is being able to apply mathematical models and being able to get data from your miners so that you can be more efficient at fixing them and developing products so that you can have near 99.5% of efficiency on your whole Bitcoin miners. So that's really key in all that.
I think this whole war in Ukraine has created a big sentiment premium for the cost of energy everywhere in the world. And so when you have any like events we're seeing now in Sweden, what we've done at HIVE is diversify, like running a portfolio. Not all of our assets are in one stock. And so we have Sweden, and then we have Iceland, and we have New Brunswick, and we have Quebec. And Quebec functions like a country within a country. So each quarter, you have a risk. It comes up, oh, Sweden's got issues. Okay, we figured that one out. Next quarter, it's Iceland. What's happened to some of these other companies, they bet all in one state in the US, and all of a sudden, energy prices go through the roof like in Georgia. You have this instability that you didn't hedge properly in Texas, and you have 300 megawatts. Guess what? Now electricity 7 cents. Zach, there's very few machines that are profitable if your energy cost is 7 cents. Because you start adding on SG&A and you add these other parts, and the machines are basically, you're losing a lot of money every day. So I think that energy is going to become a very significant part, and I wouldn't be surprised to see the global difficulty start to fall, because a lot of people are losing a lot of money today that are out there mining in various jurisdictions around the world where energy prices, like in Norway, I mean, they went from 2 cents to 14 cents and wipe out balance sheets, that cost of energy. So I think we're going to continue to live with that instability of energy unless you have stable contracts, and you have to be very careful about your contracts, and you have to have very strong relationships with those utilities. That's what we find. And you have to be lobbying. We have consultants in the US, we have them in Sweden. Iceland, we don't have anyone, but in Canada we have them. Romain, you're Fanny's and Gabe. And we have Johanna over here as our president of Sweden, and Gabe is our general counsel. And they continuously have to be relating to government policymakers and what they're doing and what they're thinking, because there's so much FUD out there. That you have to try to scrub it away.
And there is also a possibility, and I know I'm a dreamer, but it's a possibility that at some point, utility will come back to us and say, hey, help us stabilize the grid. We have an excess of energy. How can we use it the right way? And how can we, again, as Frank was saying, which I think is very clear, and that's also things that we are working on. With one thing that is the energy, we create two things, Bitcoin and the security of Bitcoin, and then heat that can be reused for different kind of things. Vertical farming for food. It could be heating buildings, and where we are in Quebec again, 9 months out of 12, it's very cold. So we can put a container next to a school, to a swimming pool, you name it. And I think people will start realizing that we are really a benefit for the electrical grid and for the community around us. So I hope at some point the FUD will be stopped about Bitcoin mining. Right now we are an easy target. Why? Because we don't have a CEO. But we are completely decentralized, but we're not disorganized, to quote Michael Saylor. So we are now showing to the industry that our industry is using sustainable energy. More than 60% of our industry is using sustainable energy. There is no other industry in the world that can say that. It's really important to keep in mind. And more importantly, we use the energy that was unsold or unused before. The energy that is not used today is gone forever. We can, and we bring an answer when we operate.
Sath, what are some of the other, a lot of mining has been concentrated, and a lot of the growth in mining has been concentrated in Texas in the US. What are some of the other markets that are currently being underlooked? It looks like, and I understand that you've been going into some new markets and looking at different assets than the more crowded trades in off-taking ERCOT energy.
Yeah, I mean, we're a truly global company. The opportunity is global. I think more recently we've been looking at developing markets. As I mentioned, we recently started a project in Nigeria. We're generally going for markets where we can provide outsized impact. And I spoke earlier about some of the benefits of being in, helping with energy security and affordability. So emerging markets, I guess, is a key focus for us over the next 24 months.
Lin, from what I understand, you've been active in Texas itself. What are some of the merits of Texas? Why has Texas been such a hub for mining? What are the dynamics of Texas's grid and its demand cycles that have resulted in the utilities there seeing miners providing a valuable service to the grid?
Yeah, so actually we are actually a newcomer, right? Say for this mining game. So we only start, this kind of operation searching site, since last year. So we have been, visiting, different countries, say Sweden, Norway, Australia, US, Canada, right? And within US, we also search, different states as well, including, say Georgia. Yeah. So at the last, say why we go for Texas, right? Is because Texas relatively, is easier to locate some available bandwidth. Say of energy that we can get. Say 100 megawatts, say immediately available. The second thing is what you mentioned about the demand response program, right? Yeah. So basically, so right now an energy cost is say 7 cents, but if we participate right in a demand response program properly, so there will be say certain rebate. I think we can save around 1.7 to 2 cents, okay, per on average out, right? Yeah, and then on Texas, right? If we don't want to go for, this kind of say fixed scheme, so there we can always go for some curtailment. So which means say you can imagine say okay every day 6 to 10 p.m. If everyone go home, right? So the electricity price is actually more expensive during that period, but you still get around, say 18 to 20 hours, right? You can access to a much lower electricity cost, right? So netted off, right? Maybe is actually another, say good strategy, right? In terms say you can say have the low balance, or you can say okay to seek for some lower cost energy.
Well, I hope that we can all continue these discussions over our lunch. Thank you, everyone, for joining us. I'm going to make sure this time, after I close out the panel, to turn off my mic. And appreciate you all joining us. Thank you.
Thank you.